Hello guys, welcome to another market review. We are gonna kick off by looking at the dollar index. I think it's the chart that we've been staring at the most for the whole month. And that's for a good reason. We were expecting an aggressive breakout once we had this monthly close on June, and we are holding above it. We were expecting this green zone to hold um, after a year of compression, so that gives us a bearish EURUSD bias and for other pairs as well. So last week we had this dip into that zone. Sorry, 2 weeks ago, and now we are pushing above that monthly open. However, the next week is going to be the last week of the month, so it's a bit weird because if we haven't pushed already, expecting that the next week is going to be really it's not where you get the most of the expansion normally. Anyway, we do have FOMC meeting and Fed funds Wednesday, so pretty sure the market won't do anything um, of interest until that point. So Monday and Tuesday are very likely to be quiet days for the FX markets. So maybe we get better opportunities looking at crosses. But anyway, so this is the way the dollar index is moving. It's lining up for push towards the 103 level. However, what do we see when we look at the Euro USD? Well, it doesn't look great. I mean, if you are bullish, the euro, it doesn't really look um, like it's gonna reverse from here, right? However, you could also think this is a range, right? And we are trading at the range lows, but it seems like we are breaking. But if we're gonna break to downside, why are we, taking so damn long? Especially when we've had oil run like 40% from from the June lows up until last week, and the euro has held that. When US oil getting bid usually means uh, the dollar getting bid as well, and this we're talking about 40% move to the upside, and the euro is remained range bound. So when we look at the weekly time frame, we can see how this week's high and this week's low, which were the first weeks of trading for the July month, um, have marked the range for EURUSD. So the trading opportunities inside this range, well, they're not massive because we're talking about a 120 pip range, which could be you know some weeks have um, that much volatility, but we're talking about a month of range bound price action. So you you would really need to see price breaking this zone, this July low. Maybe a daily close below that level is the deal. I'm not too sure. Um, I think now people are really getting bullish the dollar just as we're trading the July low. So whenever we trade it into this high, we SFP that 2 times and we roll over to the other side. And I know we are at the range lows of all these massive price action that lasted a whole year. But can't we not do something like this, right? And just trade back inside and towards the mid, maybe push towards the highs again. Because I'm not too sure what the volatility is going to cause next week, but I think that this is I think the play really is to look at oil. So I'm gonna cross this analysis with oil and what I believe is gonna happen with oil. So as I mentioned, oil has rallied 40% from the lows, and you've got that Euro USD in a small range. So it's, in my opinion, just waiting to explode in one direction. We just have to guess what that direction is. And if oil were to roll over, I think that lines up well with this play. Where we SFP the lows, maybe have a flush, but we fail to break lower, we reclaim this previous July low, and we start to push higher, and then we finally trade towards this imbalance, we get stuck, and then we really break lower. And that's my view of the euro. However, I think the most basic play really is just wait for that weekly open, see how price trades below it or above it, and try to engage in that direction. That's what I'm gonna do. Really, I'm not gonna overcomplicate things, but so if we get a short trigger around the weekly open, I will take it. But I also have my bias where we really see oil topping out, and this we get an SFP of this low and a deviation back inside the range, then I think this goes towards the other side. So that's the play on the euro. Really, it's really hard to get a read on to imagine a short trigger right now, but let's say you have a weekly open like this, and again, I don't. In the past, I used to take trades more blindly around the weekly open. I've evolved my trading style to not do that and try to interpret that. So in this instance, it's okay because you get a nice move lower than the retest you can sell. But if it just breaks down, I'm not gonna just sell this. I like to get a decent move, right? And then retest, and that's where you sell. You need to have a little bit of space so that the selling works better. It's hard to explain, but you need the inefficiency there to work in your favor. Also try to look at various engulfing, something like that, or especially we could also play around gaps, because gaps they do offer a lot of different plays, because maybe we open with a gap to downside, right? So say this is the opening price, this is the weekly open, so I'm gonna paint it green. So this is the opening price, right? So we gap down and we fill the gap, and we trade a bit higher, then we close this gap, and then we also trade below the weekly open. I think this in most weeks and across most assets, this tends to mark the high of the week, because you don't want to really when you close the gap, and then you trade again below the weekly open, it just tends to mean that this was just a sort of a trap and you're going to trade towards the other side. So that's my view on the euro. I want to jump towards oil because that's where I think the most important and the focus for the week should be at. So again, what I mentioned around playing with the gaps is this very similar thing here. Well, look at this week here. You got the weekly open around here. You open with a gap to the upside. You reject the gap, reclaim that weekly open, and that's your long. Here, you get something different. You opened with a gap to the upside as well. You closed that gap completely and even trade, even extend a bit lower. Find resistance around the weekly open and then reclaim it. And that marks the low of the week. That's what the inverse scenario I was talking about, where you mark the high of the week on the euro if it opened with a gap to the downside. So I've marked this zone here where I was expecting price to not push through it. Maybe I drew it wrong, but you know what I want to see, just around this zone. I don't care. It's if it's the 92s, the 88. It's a reversal, and it's not this zone only. It's the fact that just in a single month, we've moved up nearly 40%. So the monthly candle is insane, and it's calling for contraction, right? This is kind of what I mean, right? Aggressive push towards a zone and rejection, and maybe the next month we push through it. But we only have one more week for the remainder of the month, and I think it's if you haven't played the longs on this leg up, I think now you're very late, and I think the market is going to push, it's going to punish uh, the people who engage long around here. So the first reversal sign we get around this zone is this very single thing here. Then you mark the low once we break below it, and there you see the market not able to close above that line. So how are we going to play this short biased week on oil? Well, again, this is a weekly open, and imagine we trade above it, find resistance around here again, get below it. I'm gonna sell it, and I'm gonna at least I'm gonna trade towards these range lows and a gap fill, but I think it has the potential to push um, towards the 85, 84 level. And yeah, I think it really doesn't have to push towards this zone. You could also, just sell off a bit and then do something like this. So that's what I'm looking at for oil, and that will impact the dollar, in my opinion. If it happens, we will get EURUSD moving higher, GBP, AUD, NZD, all those pairs. So again, I'm not a pound trader myself, but look at the state of the monthly candle. Is it gonna close like that, or is it gonna turn negative? Well, my view is that we shouldn't push below the monthly open. It's very weird to change the direction of the monthly candle on the last week of the month. So I think that stepping in long at the monthly open, maybe with a stop around here, is a good play towards this level. So yeah, I'm this oil analysis is just spilling over to the rest of the charts, but again, that weekly open bias is really important, especially on the euro and oil. So we could invalidate what we are thinking right now. Gold is another interesting asset to look at. I was expecting a little bit of a stronger move, sorry, but we finally got the breakout we were waiting for around the 4,000 level. Even though we retraced most of it, I think there's a decent, very decent zone down in that one could look at, which is around here, this level. So I just think that EURUSD and the pound maybe gonna sell off early, and gold as well in the week, and then they will maybe reclaim some levels and push to the upside. But regardless of that, I think reclaiming this level on gold is important. So holding above here after making a low. So imagine the weekly open, we sell off, then we reclaim that weekly open, find resistance here, then you reclaim like this, hold, and pretty sure that then is going to push towards the 4.2k level. So that's gold. On silver, I don't really want to play silver intraweek. I'm still waiting for, what is this? Yeah, I'm still waiting to buy some lows here. I think this will get filled. I don't see bottom forming right now. Especially, also look at silver. It's made new lows while gold hasn't. It has equal lows and no, silver doesn't. So I'm gonna buy this if we get it. And you know, on gold, I have a feeling that this is gonna uh, get filled completely. So that means, you know, maybe the gold wants to push towards this zone, and from there it just does something like this. I think this is gonna fill, and 3.5k is the best level you could get involved at possibly. Want to reload my exposure here, and I think this is all looking like the same trade. I mean, gold going higher with the rest of the pairs against the USD, oil getting sold off, but then, you know, your USD hits this sort of zone, this imbalance and get stuck, and then you get another push from the dollar higher, and that would very possibly push gold lower. So let's look at this EURNZD. If I remember properly, what I said last week was that the downside was limited, and you can see the clean reaction we had, SF being that May low. That is a trigger on its own, a long trigger that is. And the reason why we believe that we were the downside was limited was we were trading somewhere on here, and you know, we've moved massively on the month. So if you're gonna short, you're very late, especially when we're running towards a previous reversal zone. So it's not coincidence that the market reversed from there. So what is my view on EURNZD? I think the low of the month is in. I think the high of the month is in, and I don't think it's gonna take out this low. And in fact, I do believe that I'm leaning more bullish for the week, and I think a dip into this zone is for buying, and nothing too crazy. Maybe just a push towards this, and that's the week really for EURNZD. Again, the monthly, yeah, I think this month is done already. EURAUD, I'm leaning. You can see how important this level is really, and how much resistance we've been finding once we broke below it. So I think there's no reason to get bullish EURUSD unless you manage to break above here, hold, then we're gonna push I think towards these highs. But again, I think you could also break lower from this trend line and quite possibly into this zone. And from here, I think you could find support, but I'm not too sure if it's gonna be meaningful. Again, nothing too clear about this pair at the moment. So let's see. Again, USDJPY played out perfectly, and what we were expecting was a breakout of this compression that was being capped by the monthly open. We got the push above, and I don't see a reason to fade this really. I spoke about how I think this is gonna keep grinding higher, and you really don't have to be a hero trying to short as it moves higher. So wait for a moment where it will retest this, give a bounce, and break below it. That's when you step in short with a stop here, and you're gonna retrace this whole move and take profit here at least. And maybe from there it just forms another base and start pushing higher again. And that's where you finally get the intervention and the carry trade unwinds, but that is a topic for another day. But I'm excited, man. I'm excited to think that maybe at some point we're gonna fill this gap. But that is a massive fucking trade, and that will that will shake the market. So that will be a fucking risk-off scenario. But you know, yeah, I think the yen should be trading somewhere around here for that to happen. Again, I'm gonna keep this trend line. I'm gonna extend it. See what happens with that. And yeah, I think I covered. Well, yeah, let's look at Bitcoin. Even though I barely trade this, I think, as I mentioned, uh, these trend lines I drew them last week, and they were on the last week's analysis. So I'm just seeing the similarity between these two. So I think a break below is gonna send us lower towards the 60k level, and from here I think there's a great argument to look for longs. We also have the monthly open and around 58.5k level. So this is the same argument I used on the pound. It's very hard to change the monthly direction the last week of the trading month. So if we push here, I think this is a blind long, especially if the move is sharp. I think this is a very choppy environment, so the likelihood of this just reversing aggressively into here, just for people to puke and you know, get all these stop losses, only for us to push finally towards the mid 70s, and from here finding maybe some resistance and making new lows. But it remains to be seen. So the favorite play really is the long around this zone. And maybe the short trigger if we get it around on a break of this trend line and some decent price action. And at least you're gonna take this low. So that would be my TP1 and TP2 if I engage short. And well, I prefer the longs really. I think at the range lows they offer a greater risk reward. But this would be a swing, more like a swing, and this would be more like a weekly play. But again, we'll revisit next week because that will be the beginning of a new month. So that will be exciting. The Nikkei has dropped nearly 15%, and this diagonal is working pretty well. So again, we don't need to overcomplicate things. We just need to look for strength and hold above the trend line, and maybe then we can get some decent move to the upside. Until then, you know, just assume that this is gonna keep pushing lower and yeah, moving like this. So I think that was everything I wanted to cover. So yeah, thank you guys, and I'll see you next week. Let's hope we can make a fucking killing this week.